Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. Dear student, we have completed 3 chapters. First was about meaning and objective of accounting. Then we have learned about accounting terms. Then third chapter is all about accounting principles. As we have learned about what is accounting, we have seen that accounting is an art as well as science of recording business transaction. So first step of an accountant is to identify the business transaction on the basis of two qualification, that business transaction should have a financial character as well as that transaction can be expressed in terms of money. After deciding that such business activity is a business transaction, he records in the books of account. So today I would like to start with the first step of accountant to recording the transaction, and that recording will be done in the journal. That recording process is known as journalizing. So journal is a book of original entry. It is a book in which transactions are recorded for the first time from the source document are called books of original entry. So journal is a book of original entry in which the transactions are originally recorded in a chronological manner according to the principle of double entry system. It is also known as day book. It means journal is what? Journal is a book of account where the business transaction first originally recorded there in chronological manner in the sense day to day basis, right? And they are recorded on the basis of double entry system. Double entry system means as per the rules of double entry to of debit and credit, right? So this is all about journal. We will see what is the characteristic of journal. Before discussing characteristic of journal, there are some terms we are going to use. The first, that is book of original entry. Journal is called a book of original entry, also called book of primary entry, because a transaction is first recorded or written in this book and therefore transferred, that is posted into the ledger of account. So first term, books of original entry, we is means to the journal. Second term, we will use journal entry. An entry recorded in the journal is called journal entry. Third, process of recording transaction is known as journalizing. This is a third term we will use simultaneously: journalizing, journal entry. This is all terms, that's why it is clarified here. Posting. The transfer of journal entry into the ledger account is called posting, right? So the characteristic or feature of journal, the first feature is day-to-day transactions recorded in a journal in a chronological manner. Means in journal, whatever the business transaction we are recording, that should be in a chronological, in the sense day-to-day basis and systematic manner, in a systematic manner. Second, it is a book of original entry in which transactions are written before they are posted in the ledger account. Definitely, first of all, we identify the business transaction and we record it into the record into the in the journal, and from the journal we, for at the classification process, we post it to the ledger to find out the balances. We will discuss at the time of ledger when we will discuss about ledger, but at this juncture we are discussing about journal. Third characteristic of journal is it records both aspects of transaction, that is debit and credit, using double entry system of bookkeeping. As we have learned about dual aspect principle, which says that every transaction has two aspect, one is a debit and second is a credit. So whenever we record the transaction in the journal, we record both the aspect. Every debit has equal and opposite credit as per the dual dual aspect, or you can say that dual aspect is also known as double entry system of bookkeeping. Fourth characteristic is journal is a record which shows complete detail of transaction in one entry. There is a system of writing a narration. After passing a journal entry, you have to write a short description with it. That short description is known as narration. We will discuss in this chapter itself while I will explain about the format of journal. And the fifth characteristic is journalizing is a process of recording a transaction in the journal, and the form in which it is recorded is known as journal entry. It is aptly clear. Now, what is the need of preparing journal? So first need of making journal is to convenient record of transaction. To record a transaction, we use journal. So first stage of accounting is to record transaction, and journal is a method or technique through which we record the transaction. So these are the needs: convenient record or recording of transaction, maintaining and preserving the identity of the transaction, ascertaining the true nature of transaction with the help of narration, and maintaining permanent record of information. These are the needs which are fulfilled by the journal. Now, what are the functions of journal? First function is it maintains the identity of each transaction by keeping record of each transaction as a permanent source of information. First function. Second, it analyzes each transaction into debit and credit aspect by using double entry system. And third, it arranges the transaction chronologically in order. So function of transaction, broadly there are three functions. First is to record the transaction and its nature. Second, it also analyzes the transactions two aspect, debit and credit, and both are recorded there. And third, it arranges all the transaction in chronological manner because it record transaction in a chronological manner, that is day-to-day basis. So these are the functions of journal. Now, advantages of journal. First advantage of journal, it provides accounting data in a chronological order. Second, it the possibility of error it reduces the possibility of error. It reduces the possibility of error means that if you record all the transactions day to day basis, then definitely there is a less chance of error of missing any transaction. Third advantage is explanation of each transaction along with journal. Definitely, there is an advantage because whenever you pass a journal entry in the journal, you also write a short description about the transaction, that is known as narration. And the fourth advantage is it is a basis for ledger posting, that is, it helps in preparation of ledger. And the last advantage is helps in locating error in case of disagreement of trial balance. Whenever you make trial balance, as in the first chapter we have discussed at the time of summarization, while I am explaining summarizing process of accounting, the first part of the summarization is preparing trial balance. Trial balance is nothing, it's a statement which enlist out or summarize all the balances as at one place. And the same time, trial balance is also used for checking the accurate arithmetical accuracy of recording. If trial balance does not match, then journal helps you out to detecting those errors. Next, Next topic is limitation of journal. What are the limitations or drawbacks of journal? The first limitation is it is not suitable for large volume of transaction. It means that if the business is small, then we can use journal for recording all the transaction in the journal, all type of transaction in journal. But when the business is large, then definitely if we are recording all transaction in journal, then journal becomes so voluminous and the work of accountant will be overburdened. He will be overburdened. So in big organization, we subdivide the journal and make a special subsidiary books for recording different transactions. We will see when we will discuss about subsidiary books. Now second limitation is it does not tells the cash balance. Definitely journal is only a recording stage. We recording transaction in journal in day-to-day basis. We There is no such mechanism mechanism in journal that you can calculate the total cash balance unless and until you prepare a cash account in the ledger and you get to know about the balance. Another way to instead of recording transaction cash transaction in journal, we can directly all the cash transaction we can record it in cash book, or cash book is also known as sub journal. And by preparing a cash book or cash journal, we can directly get the balance. But at the journal stage, if you are recording all the transaction, whether it is cash transaction or credit transaction in the journal, you cannot calculate the cash balance at any point of time. Next limitation, it is not a substitute of ledger. Definitely ledger, the purpose of preparing ledger is to get the balances of each account. Journal does not tell you the balances of each account, although it records all the transaction chronologically. So this is all about the limitation. Now we move to the format of journal. This is a format of journal. This is a format of journal. There are three columns: date, particular, ledger folio, debit amount, and credit amount. So in date column, you will write the date on which the business transaction take place. In particular column, you will write the names of accounts which are to be debited and credited. Ledger folio. Ledger folio is a column where we write the page in which this account, whether it is debited and credited, have been posted into the ledger. So ledger folio is representing the page number in the ledger where these entries are posted. Debit amount, we will write dr amount. Dr is a abbreviation of debit and cr is a abbreviation of credit. So dr amount, in dr debit amount column we will write the debit amount, and in credit amount column we will write the credit amount column. Yeah, you can see. Yeah, you go through. Yeah, this is, don't don't note down all these. It is just for reading, which I have just now explained you. You can read out. But yes, ledger, what is ledger and what is narration? Narration is a brief description of transaction, is also written after the each entry. So sometime 1 mark question can be asked, what do you mean by ledger folio and what do you mean by narration? It can be asked. So you note down in your notebook about narration and ledger folio. Rest only you will note down the format, not uh, all these notes. It is just for understanding. Now I'm showing you a practical. This is a actually looks like when you make a journal entry. So January 1st machinery was purchased, so machinery was debited. So debit account should be written first, and after that the account which is credited, that is cash account, is credited. It should be prefixed with the to. And this is a convention that after while you are writing the credit account, you will leave some space on left side, right, like here. So after that you will write cash account, and after machinery account, which is that amount, and that account is debited, we should, on the right hand side, extreme right, you will write dr. And ledger folio, you don't write anything in ledger folio unless and until it is given in the question. In debit column you will write 50,000, the machinery was purchased for 50,000, so you will write 50,000 in debit column. And cash account was credited, so you will write on the credit side, that is 50,000. And there is a short description is written. This is known as narration. So purchase of machinery for cash, this is a brief description about the transaction is written, that is known as narration. This is the practical way you will do after learning the method of generalizing. So, how will you generalize the transaction? First of all, you must know about the how you must know about the debit and credit rule. So, next topic is rule of debit and credit. How could you decide which account to be debited and which account to be credited? This can be understood by understanding the methods. There are two methods of debit and credit. One is traditional or conventional method. This is first traditional or conventional method, which is also known as English or British rule. And second method of debit and credit is modern approach or American approach, or it is also known as accounting equation approach. So first of all, we will discuss traditional or conventional method. Under traditional or conventional method, we classified the account in three groups. Accounts, on the basis of their nature, we classifying them into three groups. One is personal account, second is real account, and third is nominal account. Personal account is related to person. Personal, when I say personal account, it means I'm talking about person. That person can be natural person, can be artificial person, and can be representative person. So personal account is related to person, and that person can be of three types: natural personal account person, artificial person, and representative personal. So natural person means any human being is treated as a natural person, for example Ram, Asha, etc. Artificial person, any organization or institution which works like a person, like LIC, like bank, trust, school, any institution, any body corporate is treated as an artificial person because they work like a person. And third category of personal account is representative personal account. Any account which represent any person, for example salary outstanding representing an employee who has provided services, who has rendered services to the business but not yet received salary. Prepaid, for example, another example is prepaid rent. Prepaid rent represent a person to whom we have paid rent in advance. In future we will get benefit from him. So prepaid rent is also representing a person, the same way as salary outstanding is representing the employee. Prepaid rent is representing the landlord to whom we have paid in advance. So for personal, if transaction contains personal account, then the rule for personal account is debit the receiver and credit the giver. Debit the receiver, credit the giver. Means, what does it mean? Debit the receiver and credit the giver. It can be understood by this. It is for personal account, debit the receiver and credit the giver. Debit the receiver means any person receives goods, cash, assets, benefit, or losses from the business, that person account should be debited. Debit the receiver means any person who receives anything from the business, such as cash, assets, benefit, or losses from the business, his account should be debited. Right? For example, I give you paid cash to Ved. In this transaction, cash was paid to Ved. Who paid the cash? Business. Your business has paid cash to the Ved, to Ved. So Ved is a person. Ved is a person. And he is receiving what? He is receiving 10,000 from the business. So business paid cash to Ved. Ved is a natural person. He is the receiver of cash from the business, so his account should be debited. The same second rule of personal account is credit the giver. Credit the giver means if any person gives anything to the business, that anything can be of goods, cash, assets, benefit, or losses, that giver's account or that person should be credited. For example, received cash from Harsh rupees 10,000. So Harsh is a giver of cash to the business, that is 10,000. So Harsh is a giver of cash rupees 10,000 to the business, so his account should be credited. Is it clear? Now next, now I'm going to talk another classification, real account. Real account is related to assets or property of the business. Assets, we know it when we have discussed about accounting terms. Assets are the property of the business. So real account is related to assets or property of the business. So real account can be of two types, as we have discussed. Asset can be of two types, tangible asset and intangible asset. Same way, real account can be of two types, tangible real account or intangible real account. Tangible real account means those assets which can be seen and touched, or which can have physical existence, like for example cash, machine, building, furniture, etc. Intangible real account, that is those which are not having any physical existence, that is for example patent, goodwill, copyrights. So rule for real account is debit what comes in and credit what goes out. What does it mean? I just explain you. Debit what comes in means whenever business acquire any assets to the business, that asset account to be debited, or any asset, any increase in value of any asset of an asset in the business, that asset will be debited. For example, if you have purchased furniture means furniture in your business. Earlier there was no furniture, now you have purchased, so furniture is coming into the business, so furniture account should be debited. Credit what goes out means whenever any asset goes out of the business, or there is any decrease in value of any asset, then that asset account should be credited. So for example, I have taken one example, that is furniture purchased for rupees 10,000. This is a this is a transaction. This is a transaction, business for furniture purchased for rupees 10,000. So in this transaction, there are two accounts are involved, two aspects, two accounts are involved, furniture and cash. Right? So furniture and cash both are real account. Both are real account. The nature of furniture and nature of cash is real account. So furniture is an asset as well as cash is also an asset. So furniture, if you analyze the furniture purchase for rupees 10,000 means furniture is coming into the business, so it should be debited. And the same time, cash is also a real account, and cash is because business is paying cash means business cash is decreasing, so cash is going out, so it should be credited. CR is an abbreviation of credit. DR is an abbreviation or short form of debit. So this is all about real account. Now we will discuss about the nominal account. Nominal account is related to expenses, losses, income or gain. Expenses such as salary, purchase, etc. Losses such as bad debts you have we have already discussed. Bad debt means any amount which is irrecoverable from debtor. Depreciation is decrease in value of any asset. This is also a non-cash loss. So losses are depreciation. Income such as income received, discount received, sales, etc. These are the example of nominal account. So nominal account, rule of nominal account: debit all expenses and losses, credit all income and gain. Income and gain means whenever there is a expense in the business, that expense account will be debited. Suppose business has paid salary, so salary, payment of salary is an expense for the business, so salary account will be debited. So business received interest received on investment, so business is receiving investment interest on investment, interest received is an income, so it should be credited. So that's all for the day, students, and tomorrow we will learn uh, more about debit and credit rule, and we will see how we can channelize. Thank you. Have a nice day.